A software salesman, who started on an apple crate, built the biggest investment fund in history. Then he lost $14 billion renting desks. It all began on September 3, 1981. A dusty little warehouse in Tokyo. Masayoshi Son, a 24-year-old, climbed onto a wooden apple crate. In front of him, his two part-time employees stared in disbelief. With a steady voice, he promised them they'd rake in millions within 5 years. Welcome to Plexo. Masayoshi wasn't a traditional Japanese executive, he was an outsider. He was the grandson of a coal miner. Also, the son of a pachinko parlor operator and pig farmer. As a third-generation Korean immigrant, he faced discrimination, kids even threw rocks at him at school. But he had boundless ambition and a brilliant mind. At 16, he moved to the US to study at Saramont High School. Then he entered Holy Names College. At 19, he transferred to UC Berkeley. There, he designed an electronic translator, sold it to Sharp Corporation for $1 million, and returned to Japan with seed capital. With that money, he founded SoftBank. At first, the company just distributed software for early personal computers. But Masayoshi quickly grasped something key: real power wasn't in selling cardboard boxes of floppy disks, it was in controlling the networks that information flowed through. SoftBank grew, organized tech fairs, and started buying specialized magazines. The young man shouting from an apple crate was laying the foundation for a financial empire. No one in Tokyo could yet imagine how far he'd go. For global domination, the real leap didn't happen in Japan, it happened in China. In 2000, the dot-com bubble was about to burst, but SoftBank kept hunting for opportunities. Masayoshi Son traveled to Beijing to meet with several tech entrepreneurs. Among them was a thin, charismatic former English teacher named Jack Ma, who was looking for funding for a modest e-commerce portal. After listening to him talk for just 5 minutes, Masayoshi made a gut decision. He offered $20 million. That portal was Alibaba. 14 years later, when Alibaba went public on the New York Stock Exchange, that initial investment had ballooned to over $60 billion. That check, signed in Beijing, became the most profitable lottery ticket in modern capitalism. This colossal hit forever altered the founder's psychology. Masayoshi Son, a short man with an intense gaze and a permanently defiant smile, became convinced his intuition was infallible. He saw himself as an oracle of technology, able to spot the future before anyone else. Buoyed by this success, SoftBank started buying telecom companies, acquired Vodafone's Japanese unit, and brought the iPhone to Japan. Money was pouring in. But Masayoshi wanted something much bigger than a phone company. He wanted to become the king of the global tech ecosystem. To do that, he needed an immense amount of capital. No traditional corporation could raise those funds alone. The question was, who in the world had that kind of money and was willing to hand it over? September 2016. Tokyo, Japan. During an official visit, Masayoshi Son sat down with Crown Prince Mohammed bin Salman. The Japanese businessman pulled out a presentation and made a bold offer. He promised a $1 trillion gift in exchange for a massive investment. On October 14, 2016, in Riyadh, the deal was announced publicly. In just 45 minutes of conversation, Masayoshi convinced the Saudi Sovereign Wealth Fund to contribute $45 billion. Combined with SoftBank's capital and other investors, the Vision Fund was born, a financial monster worth $100 billion. It was the largest venture capital fund ever created. To put it in perspective, its size was nearly 1.5 times the entire annual venture investment in the United States. The Vision Fund's strategy was brutal. Masayoshi would identify the leading startup in a sector, offer it hundreds of millions, and issue an ultimatum. If they didn't take his money, SoftBank would fund their main competitor to crush them. Once a company accepted the check, The order was clear: grow at any cost. Money flooded Silicon Valley. SoftBank bought massive stakes in Uber, chipmaker Arm, and dozens of delivery apps. Men in white robes and dark suits signed documents. Meanwhile, billions were transferred with a single click. The goal wasn't immediate profitability, it was to create global monopolies by subsidizing services with Arab and Japanese capital, hoping competitors would suffocate. The plan worked until it didn't. Among all of Masayoshi Son's reckless bets, none was as catastrophic as his obsession with WeWork. In 2017, SoftBank's leader visited the company's offices. It was a business, renting out workspace in New York. After a 12-minute tour, he got into the car of founder Adam Neumann, a charismatic and narcissistic entrepreneur. Right there, Masayoshi pulled out his tablet and sketched a $4.4 billion deal, $3 billion directly to WeWork and $1.4 billion to its Asian subsidiaries. Masayoshi saw a reflection of himself in Neumann. He told him his only problem was that he wasn't crazy enough. SoftBank poured in capital without restraint. This pushed WeWork's valuation to $47 billion by January 2019. The company leased buildings long-term and subleased them short-term, a traditional real estate model that Neumann sold as a spiritual and technological revolution. The mirage shattered in August 2019. When WeWork released its IPO prospectus, Wall Street investors pored over the documents. They quickly discovered a financial black hole. The company was losing nearly $2 billion a year. There were blatant conflicts of interest and absurd expenses approved by Neumann. The market's reaction was swift. The IPO was cancelled. Neumann was ousted from his own company. The valuation collapsed to laughable levels. Moving trucks emptied the luxury offices. At the same time, neon signs reading WeWork were ripped off skyscraper facades. Masayoshi had blindly trusted his intuition, but this time, the oracle had lied. WeWork's collapse wasn't a temporary stumble. It was a historic financial disaster. On November 6, 2023, the co-working company filed for Chapter 11 bankruptcy in the United States. SoftBank had poured in capital nonstop to keep the dream alive. It ended up with cumulative losses exceeding $14.3 billion. Screens on the Tokyo Stock Exchange turned blood red, reflecting the hit to the Japanese conglomerate's books. Masayoshi Son, the man who dreamed of dominating the world from an apple crate, had to face his investors. In an unusually somber tone, he publicly admitted his mistake. He confessed he had been a fool for blindly trusting Adam Neumann and inflated valuations. The Vision Fund became a monumental albatross. In the following months, SoftBank reported record quarterly losses, forcing the company to sell off assets and go into defensive mode. The model of throwing infinite money to crush competition had failed spectacularly. It proved something vital: capital alone can't sustain a business without real fundamentals. Still, Masayoshi Son refuses to give up. Now he's steering his billions toward artificial intelligence, hunting for the next Alibaba to erase his recent mistakes. His story reflects an era of cheap money and outrageous promises. In that time, founders' egos trumped economic logic. SoftBank didn't invest in the future, it bought the right to be wrong on a monumental scale. No central bank would have dared to bail out something like that.